Let's talk about Blue Label next, because remember, it started out its life as a plucky operator distributing airtime. You know, the coupons that you buy at the petrol stations in order to recharge your phone. It's got a business that's bigger than that. It's globalized as well. It's in India and it's in Mexico. But the news today was that they're going to pay 5.5 billion rand in order to buy a 45% stake in a recapitalized Cell C, South Africa's third largest network. The resulting entity will have all sorts of new requirements with regard to debt, but as far as it goes, Blue Label is capitalized on our market at 12.6 billion rand. Price to earnings ratio on its traditional high revenue, low margin business is about 18.68 and a dividend yield of 1.92%. Do you like the look of the Cell C deal?
It's an interesting one. I think there will be short-term benefits in terms of...
Cell C's been capitalized and recapitalized more times than SAA.
Just about. So, yes, because being the third largest operator, when you have two dominant players that also just before you entered changed the rules which didn't allow you to enter properly because of the on-net termination rates, it makes it extremely difficult and has made it extremely difficult. So it's interesting because Blue Label is also a major client of Vodacom and MTN distributing their airtime electronically.
And that's not going to be an issue for the guys,
It might be an issue, and it probably will be an issue. So it'll be interesting to see what Vodacom does in terms of choosing Blue Label to distribute airtime. One of the other options is Net1. But now Net1 has taken 15% share in Blue Label. So it'll be interesting to see what the Competition Commission thinks of that, where you have EasyPay, part of the Net1 stable, almost strategically teaming up with Blue Label, which creates some issues maybe in terms of not having that many options for the network operators how to distribute their airtime. So an interesting one.
Although the network operators are very powerful and they probably have noticed that there's going to be less physical distribution and more like cell phone based pinless top-ups and all that kind of stuff. Banks, ATM networks, I mean basically everybody is in airtime resales. Okay, so what has happened here is a fantastic looking share price, as Blue Label has really done extremely well in the last year and a half. But now there's this added risk, more debt, stake in a business that they don't control with partners that has typically been an underperformer. Seems to me like the risk is rising, but the market is telling you it's a good one. Are you hot or not?
Yeah, I do think it was too cheap. I do think they've exceeded expectations on the revenue growth, both from airtime distribution and others like electricity distribution. But I do agree with you. I think the jury is out on the Cell C deal, whether it will be very good. Cell C will probably list in the next 3 years or so. Then we'll see properly, and there will be more details in the circular. But up until then, I'll stand on the sidelines, and therefore, for me, not hot.
Exactly. That's very well said. I endorse that position. Right.